Hi friends, welcome to my channel. So today I won't be doing any analysis like what has happened in the market and what will be happening tomorrow. So that it is available everywhere on the YouTube. Like you can go and search it. But today, especially like today, I won't be making it. But from tomorrow, I'll try to make it every day. Like I just want to teach you something different where you can't get in any of the YouTube or any of the Indian Indian traders who explains you in this way. This is completely an algorithmic way. What makes the price to move up and down? The first and foremost thing, you are here, you can notice this is called as an bid and this is called as an offer. So when there is in a balanced market like bid and offer, there is a balance like two buyers and two sellers, two buyers and two sellers. The price will be starting to move in certain range itself. So this we call it as a balanced markets. Whenever the balanced markets are there, the price will be tentative to move in a certain range. Why? Because big time frame players, they will be hedging their positions in every microseconds and milliseconds and even in a seconds. So this you can notice here, the time frame is like just 5 seconds. 35 seconds. Within 5 seconds, how many transactions has been happened in this trade? So these transactions happens because the big time frame players, even they want to hedge the position or even they want to build their positioning, I would say, like positioning, what the positioning might be net long or net short. It's all depends on the algorithms. Like I'll be coming to know like what the net positioning they are going to build in future, like with the help of these advanced tools. So in here you can notice like there is a completely a balanced market. So the balanced market tend to stay you in a range itself. So when you see the imbalances here, you can notice here like three sellers and there are two buyers, I would say, like the two buyers in here, and there is a one buyer on the other side. When there is an imbalance, what the other buyer will do is like he'll pull his orders out. That means he'll just come out of it orders thinking like there are three big players are there. So these three big players, what they do is like they try to bring the price on the opposite direction. So that is how the price it moves, but I've explained you very briefly. But I will be coming out with a separate video where I'll explain you in detail like how the price moves and what are the parameters to be taken, how the fundamental price moves and how the technical price moves. Everything will come out with a different video. So what has happened today's market? I'll go into today's chart. You can notice like there was a little bit of a flush in the market. So after the flush, like I was 100% confident because I'm been using like advanced tools, and I explained to my clients like today will be a very good short covering move and you can sit up until here, like you'll be able to get some 200 points on the one direction itself. And I captured up until here somewhere, and a little bit of misunderstandings and all these things. Like I just closed my terminal. I would have captured this move, and I captured up until here, and I exited my clients to come out of the positions. And later, like there wasn't a little bit of an accumulation in the market came on the opposite direction. Just observe these things, why the market has opened up and why it came on the downside. So ask yourself why these things has happened, what has happened in the market. So I'll explain you with the help of the algorithms. Just observe here in this part. In here, the price is opened here. So the price straight away came into certain place. So this place we call it as in a large orders. So this is called as in a large orders. What the big time frame players they do is like they sweep the price. That means they sweep the price from one direction to the other direction where there is a large orders in here. So once they sweep the price, their orders has been filled, they start to bid the price aggressively on the other direction. The same thing has happened in the market. And if you notice here, there is a little bit of a pocket positioning. What is pocket positioning is like little bit of a liquidity on the higher side and little bit of a liquidity on the lower side. The inability to sell on the downside and inability to buy on the upper side. But here, whenever the initiative comes, the initiative takes in the opposite direction. You can see these are the white color things. The white color where you can notice here the white, this is the white, and here the white. This is called as a heavy liquidity places. This we call it as heavy liquidity areas. And here you can see like little bit of a brown and little bit of a brown and little bit of a white and little bit of brown is called as a light liquidity. The big time frame players, they don't provide the heavy liquidity on the up here. So the price broke on the opposite direction, and again you can notice here there is a big liquidity on the other side, and the price started to rotate on the downside up until here, and the price retested here, and again the price started to price started to go in the opposite direction. So here I just want to show you one more thing. Like, so this is a completely a trending market chart. So trending market, you can notice very clearly what has happened in the market. The price opened somewhere here. The price opened and immediately it went on the upper side, and you can notice here there is a limit orders here. That means what is happening is like they are doing the accumulation. This we call it as a pocket positioning. I clearly mentioned you like this is a pocket positioning where you can't see on candlesticks charts or anything, but I can able to see, I be able to privilege to see these things because I'm using the more advanced tools than you. Like I'm 10 years or 20 years advanced than you, I would say, like because I've been using from so long time these tools, and I've been trading from so long time, and I know where to put the big size and where to not to put the small size. So what has happened is like the price went aggressively on the higher side, and they started to put the limit orders here. That means the price is going up and the price is coming down, and the price is going up and the price is coming down. That means that someone is accumulating this price. And as soon as the initiative came, there was a little bit of a big large orders. All the large orders got broken, and it went to a certain price point, and it got accumulated again here. Again it went to the certain large orders, again it went and accumulated here. Again there was a breakout. But what has happened at the top is like there was an exhaustion in the sense like big time frame players, they don't want to buy higher and higher prices, so they just gave up. It was in a search of a liquidity. Wherever the liquidity it has found, it stopped there. The same thing has happened in our markets as well. Like you can clearly notice in our market the same thing has happened. The market swept on the downside, it came where it was, limit orders was there. So at the limit orders, all the limit orders have been filled, and straight away the market bid it up, and there was a big large orders on the on these levels. There was a big large orders here, and large orders, so that there was no price slippage in here, and the price started to accumulate here and started to bid up, and there was again liquidity which found here, and the big liquidity has been broken out, and whoever was providing the liquidity, all they started to cover their shorts, and the market went up. And when it found a big liquidity here and it couldn't go up, and there was an exhaustion in the market, and there was a little bit of an accumulation, and there was an initiative on the opposite direction, and the price reversed on the opposite direction. So the market is very simple. The analysis what I do, the analysis what you do, it's all depends on you. But please, my request, don't try to take the trades anything on based on the candlesticks, because candlesticks are the one where they can fool you, because you don't know what the volume is coming in this candle. You don't know what the volume is coming in this candle. But I have the source. Like you can notice here, I didn't give any of the trades for my clients the morning. Like I said, only about 260, somewhere like above 260 I wanted to buy them, because I didn't wanted to buy them at a lower levels, because I don't know. See, the price swept on the downside. Yes, there was a limit orders, I was seeing the limit orders, but my confirmation comes when the buyers enter into the market. I clearly explained you when the imbalances occurs. Imbalance in the sense like when there is a buyer, when there is a one buyer, when there is a one seller, when there are two buyers, when there is one buyer, one seller, the seller will get panic and he'll just take out his orders. That is what same thing it has happened, and it was very much confirmation for me. Like 800,000 has been traded here, and later somewhere like 9:45 there was a very good substantial amount of the volume which came, and there was a breakout in the market, and it was very much clear for me like the buyers are there, because not only this order flow, I use different other tools as well. So with that I can see the way the large orders are there, and where the spoofing is happening. Spoofing is like some people they keep fake large orders, and they show like these are the large orders, but I'm able to analyze like what is spoofing and what is not. And it was very much clear. Like today was a short covering, and 9 o'clock itself I updated for my clients like it will be a short covering move, because I was prepared yesterday itself for a short covering, but somewhere like night I prepared like today will be a short covering move, and as expected, like we had a very good short covering move, and my premium clients whoever was there, like they made a very good profits today. And apologies, like I couldn't give in the public channel due to certain things. And you can notice like here very clearly like price couldn't go these levels because there was a big large orders here. So I don't want to show you in Nifty and Bank Nifty, because these things are totally highly advanced tools which I don't want to reveal into the public. So I will be definitely teaching you in the coming days. So I'll come out with a separate video itself. I hope you learned something today. So why the sweeping happens, sweeping like why the price sweeps from one direction to the other direction, and why it goes into a big large orders, and then why it starts to bid up on the opposite direction, and what are the imbalances, why the price drives in the opposite direction, and why the price drives in the opposite direction. So, and even I made a separate video on this one, like how to identify. First you need to identify when is a trending day, and when will be a short covering day, and when will be a volatile day, and when will be a range bound market, and when will be like stops being triggered by the big time frame players. So all these things I'll be teaching only in the classes itself. I won't be coming out with any of the videos, but I'll be coming like how the algorithms will be moving in microseconds and milliseconds, and how we can analyze it and how we can capture the good moves. And someone was asking like about the P&L and other things. See, look, like my size and my risk appetite is very big compared to you, or compared to these things. I do trade, yes, I do trade, but my risk is completely different compared to you, because I can go and take the risk very big, or I can go and take the risk very small. It all depends on the trade which I've been taking. Like today it was very simple, so my risk was very little, and when I'll be having a volatile day, so that day I'll come down like what risk, how much risk I have to take. So particular risk itself I'll be taking. I won't be risking much, even sometimes not 100 times more, some of the times even my stop losses get triggered, but I don't mind. But when I'm making the money, like I'll be making really huge money, and I don't want to come and ask you in a P&L, because I've been started this YouTube channel 8 months before, and never I asked anyone to send the P&L or anything. All I want is to you to learn, and all I want you to don't just blindly follow the candlesticks, because the candlesticks can cheat you. If there is no volume, the candlesticks can be created by the computer programs. These candlesticks, if someone is doing the analysis based on the candlesticks, that is completely false, because candlesticks we see only for the structural format. For the execution, we need to have advanced tools of an order flow, or depth of the market, or we see like how the buyer and seller is interaction it is happening, and who is dominating the market, and where the volume is picking up, and where the stops are there, where the stops will be triggered. So everything counts, and based on that itself we will be executing our trades. So we won't be taking anything blindly. I hope you like my video. If so, please do like it, and subscribe it, and share with your friends. I'll be making much more learning videos for you. If you really need an analysis video, please do comment at a comment section itself. Thank you so much.